Welcome to Headphone News, International Edition for Monday, February 24th, 2025.
Ethiopia's bold climate goals. Ethiopia is boldly stepping up to tackle climate change with a target to cut greenhouse gas emissions by 68.8% by 2030. Fitsum Assefa, the Minister of Planning and Development, announced this during a meeting that emphasized the vital role of the private sector in this fight. The country aims for net zero emissions by 2050, aligning with global commitments in the Paris Agreement. Ethiopia's strategy focuses on making the nation better prepared for climate change by incorporating adaptation and reduction efforts across key areas like agriculture and energy. Fitsum Assefa urged businesses to invest in green projects and adopt sustainable practices. Collaboration among the government, private sector, and development partners is essential for driving sustainable growth. Given its vulnerability to climate impacts, Ethiopia is committed to protecting its environment and economy, showcasing its dedication to a sustainable future.
Impact of U.S. tariffs on the European economy. A recent report from the European Central Bank highlights serious challenges for the European economy due to new trade taxes from the United States. The U.S. has imposed a hefty 25% tax on steel and aluminum imports, along with additional taxes on cars, computer chips, and medicines. This raises concerns about the effect on the European Union economy, particularly in the steel and automotive sectors. The European steel industry, already struggling with high energy costs and low demand, could lose up to 3.7 million tons of steel shipments to the U.S. Experts predict that German car sales may drop by 7%, while Italian exports could fall by 6.1%. Major manufacturers like Volkswagen and Volvo are especially vulnerable due to their reliance on U.S. markets. These tariffs have also strengthened the U.S. dollar, negatively impacting the euro's value. Goldman Sachs warns that the euro-to-dollar exchange rate might dip below parity, potentially reaching 0.97 to 1. In response, several European companies are considering increasing investments in the U.S. to cushion the impact, as uncertainties around trade policies continue to weigh heavily on economic growth in the Eurozone.
Escalating tensions in the West Bank. Israeli military actions in the West Bank have intensified, with tanks entering the region on February 23, 2025, marking a significant shift after decades. This follows a military campaign that began on January 21, aimed at tackling rising extremism. Israeli Defense Minister Israel Katz announced that troops will stay in the West Bank for an extended period, leaving about 3 million Palestinians unable to return to their homes. The situation has worsened since the Israel-Hamas conflict erupted on October 7, 2023, resulting in over 800 Palestinian deaths. While the Israeli government sees these actions as vital for security, Palestinian authorities strongly criticize them as dangerous escalations. The United Nations reports that around 40,000 Palestinians have fled their homes, leaving urban refugee camps largely empty. This ongoing conflict, rooted in decades of tension, underscores the urgent need for dialogue to prevent further suffering and instability in the region. As military actions continue, Israeli Prime Minister Benjamin Netanyahu faces pressure from far-right partners to escalate operations in response to perceived threats.
Putin appoints Kirill Dmitriev as special envoy. President Vladimir Putin has named Kirill Dmitriev as a special envoy for international economic and investment cooperation. This move follows high-level talks between the United States and Russia, the first of their kind since the military actions in Ukraine began in 2022. Dmitriev, 49, leads the Russian Direct Investment Fund, which aims to attract foreign investment into Russia. With a background in investment banking and experience at major firms like Goldman Sachs, he is well equipped for this role. The recent discussions took place in Riyadh, Saudi Arabia, where Dmitriev joined Foreign Minister Sergei Lavrov and other officials. His appointment is crucial for strengthening economic ties with the U.S. and the Global South, despite ongoing sanctions. Dmitriev's involvement in negotiating the release of U.S. teacher Mark Fogel highlights his diplomatic efforts. This role could open new investment opportunities, although geopolitical tensions may pose challenges.
Concerns over NATO's future amid U.S. policy shift. Friedrich Merz, the likely next Chancellor of Germany, has sparked a heated debate about NATO's future following comments from former U.S. President Donald Trump's administration. He questions whether NATO can remain intact by June and emphasizes the urgent need for Europe to develop its own defense capabilities. Surprised to be making such statements on television, Merz highlights the seriousness of the situation. Trump's administration has urged European allies to take more responsibility for their security, with U.S. Secretary of Defense Pete Hegseth warning of significant challenges that could limit U.S. focus on Europe. As the NATO summit approaches, Merz wonders if NATO's current structure will still be relevant. His concerns are echoed by Robert Habeck, Germany's acting economy minister, who warns that the U.S. might be undermining European interests. This evolving situation raises important questions about NATO's future and the security landscape in Europe, potentially leading to increased military spending among European nations. What does this mean for everyday life in Europe?
Qatar's AI partnership with Scale AI. Qatar has launched an exciting 5-year partnership with Scale AI, a company based in San Francisco, to transform government services using artificial intelligence. This collaboration aims to deploy AI tools that will simplify operations and enhance efficiency for citizens. Trevor Thompson, Scale AI's global head of growth, believes this initiative could set a benchmark for governments around the world, showcasing the rapid benefits of AI. Over the next 5 years, the partnership will develop more than 50 AI applications tailored specifically for Qatar's needs, including smart data analysis and automation. As a small but affluent nation on the Persian Gulf, Qatar is heavily investing in technology to stay competitive with neighboring countries like Saudi Arabia and the United Arab Emirates. This partnership not only reflects Qatar's commitment to modernizing its public services, but also raises important questions about data protection and job impacts. Overall, this collaboration positions Qatar as a leader in technological innovation in the region.
U.S. lawmakers seek clarity on EU tech regulations. U.S. House Judiciary Chair Jim Jordan is asking for clarity from Teresa Ribera, the EU's antitrust chief, about the Digital Markets Act, or DMA. This law aims to control large tech companies and ensure fair competition. Jordan is concerned that the DMA could unfairly target American firms, giving European companies an edge. The act imposes hefty fines for violations, reaching up to 10% of a company's global annual revenue, which could significantly impact U.S. giants like Alphabet and Amazon. Jordan's request follows a warning from former President Donald Trump, indicating that the U.S. will closely examine the DMA and the Digital Services Act. These rules dictate how American companies interact with consumers in the EU, raising fears they might stifle innovation. The European Commission insists it is not targeting U.S. firms, but ongoing discussions reveal rising tensions between U.S. and European regulatory approaches. This situation could force U.S. companies to adapt their strategies to comply with European rules while facing potential penalties.
Trump administration's new directive on unaccompanied migrant children. The Trump administration has launched a new effort to locate unaccompanied migrant children who entered the United States without their parents. This directive expands the role of Immigration and Customs Enforcement, or ICE, in enforcing immigration laws and deporting those who cross the border illegally. Since 2019, over 600,000 children have made this dangerous journey, raising serious concerns about their safety. ICE plans to implement this initiative in 4 phases, starting with planning that began on January 27, 2025. The agency has identified 3 priority groups for these vulnerable children: flight risk, public safety, and border security. They aim to protect these children from human trafficking while upholding immigration laws. As debates about immigration reform continue, the impact of these policies will resonate through families and communities across the nation.
Australian banks face major market drop amid economic worries. Australian banks saw a dramatic drop in market value on February 24, 2025, losing over 63 billion Australian dollars, or about 40 billion US dollars, due to rising economic concerns. This sell-off was triggered by the Reserve Bank of Australia's recent interest rate cut, the first since November 2020. While the aim was to boost the economy, investors reacted by pulling out of stocks, particularly those of the Big Four banks: Commonwealth Bank of Australia, National Australia Bank, Westpac, and ANZ Group. Despite a slight recovery of 0.8% in financial stocks that day, these banks have together lost over 7% since February 12, 2025. Commonwealth Bank of Australia experienced a notable 10% drop in its share price, resulting in a loss of around 25 billion Australian dollars. National Australia Bank reported a nearly 14% decline, equating to about 18 billion Australian dollars. Earnings reports indicated modest growth, but rising bad debts and borrower arrears have created a sense of pessimism. Analysts from Macquarie Group warn that a decline in the sector's value may be on the horizon. As this situation unfolds, stakeholders are closely watching how these changes will impact the broader financial landscape.
Trump administration restructures USAID, cuts jobs. The Trump administration is making major cuts at the U.S. Agency for International Development, known as USAID, planning to eliminate at least 1,600 jobs and place nearly all staff on administrative leave. This unprecedented move could reshape the agency, which has been active for over 60 years. A federal judge, Carl Nichols, has allowed the administration to proceed with these cuts despite a lawsuit from employees. Deputy Administrator Pete Morocco stated that about 600 staff will stay on temporarily to manage travel for personnel and their families abroad. This restructuring includes closing the agency's headquarters in Washington, D.C., and halting many aid programs worldwide. Critics warn that these cuts could weaken U.S. national security and international relations, while supporters, including Elon Musk, argue that USAID's operations are wasteful. As this situation unfolds, the future of USAID remains uncertain, potentially impacting millions who depend on U.S. relief assistance and economic support.
UK imposes new sanctions on Kremlin-linked individuals. The UK has announced new sanctions against individuals closely tied to the Kremlin, marking 3 years since Russia's invasion of Ukraine. These measures aim to restrict entry for those providing strong support to Russia or profiting from their connections. British Security Minister Dan Jarvis stressed the importance of holding wealthy elites accountable for their actions that harm the Russian people while fueling the ongoing conflict. Prime Minister Keir Starmer is set to visit Washington, D.C., to discuss the situation in Ukraine with former President Donald Trump, following a similar meeting with French President Emmanuel Macron. Sanctions are economic penalties imposed by nations to influence government behavior, including travel bans and asset freezes. The UK's latest actions show a commitment to support Ukraine and pressure Russia to cease its military actions. As the situation unfolds, the international community is closely watching the impact of these sanctions on Russia and the global geopolitical landscape.
Indian rupee under pressure amid foreign outflows. The Indian rupee is facing significant challenges as foreign investors have pulled out over $11 billion from Indian equities this year. As of February 24th, 2025, the rupee stands at 86.6380 against the United States dollar. In response, the Reserve Bank of India is stepping in to stabilize the currency, purchasing 1 trillion rupees in government bonds and injecting cash into the banking system. Despite these efforts, analysts like Abhilash from Nuvama expect the rupee to remain under pressure, likely trading between 86.40 and 87.10 soon. The RBI plans a major dollar-rupee swap worth $10 billion on February 28th, following a previous $5 billion swap. With India's inflation rate projected to hit the target of 4%, the RBI may have room to adjust its monetary policy. Overall, while the RBI's actions aim to maintain cash flow, the rupee continues to face a downward trend.
That is all the news for today. Thank you for listening to today's Headphone News. News summary brought to you by AI.